The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Greetings, everyone. Welcome to another edition of Breakout Investing on TFNN. Always my pleasure to be with you. Breakout Investing is now 5 days a week on TFNN from 3 to 4 Eastern, 5 days a week. So, happy about that. If you can't listen to the show live, you can always grab it over at iTunes as a free download, so check that out. This is a call-in show as well, so if you want to give me a call, talk about this market, talk about some stocks on your watch list, what is the market doing here, you can do that toll-free, 877-927-6648. Don't forget, with your Android device, your iPhone, any handheld device, just type in tfnn.mobi in your smartphone browser, and you can listen to the TFNN stream that way as well. If you want to look at charts along with me, use Tiger TV on the homepage of tfnn.com to do that. You can also view Tiger TV on your handheld device, but at tfnn.com, Tiger TV is the show is carried live on Channel 1, Channel 13. You'll see an archive of the show. Let's start off by taking a look at the NASDAQ 100 today. A lot of noteworthy movers in the NASDAQ 100. We're green. All the major averages are green except the NASDAQ 100 at this point, but it is trading up near its session high after early weakness. Still down about 0.2% to 2561. 2561. And a lot of notable movers in the NASDAQ 100 today. So it hit an intraday low of 25.35, trading up near its high, but still down 0.2%. Let's start by taking a look at Apple. I'll tell you what, when Apple reported earnings late last night or late yesterday afternoon after the close, I was really not thinking, like most other people, that it was going to be a good day for the market. It was a bad miss by Apple, but all in all, the market is performing not too badly in light of weak results from Apple. Their iPhone shipments came in at the low end of expectations. iPad sales were pretty good at 17 million, but quarterly profit of $9.32 a share. That was almost $1 below the consensus estimate around 10.35, up 20% from a year ago. Sales up 23% to 35 billion. But shares of Apple under pressure for most of the day. It hit an intraday low of 570. It is down about 3.9% now to 577.75. A lot of people discussing this quarter as a sort of a one-off quarter, an anomaly. A lot of people saying it's a buying opportunity here. I don't think so. Apple is now below its 50-day moving average. It is trading up near its session high today, but this looks like a broken stock for now. A lot of big sellers in there today. So I'd be careful with Apple. I just kind of take a wait and see approach here. You do have a lot of new product launches coming out. iPhone 5, of course. You've also got a smaller, cheaper iPad. But that was a weak quarter by most indications, and we'll just have to see if if it was just a one-off quarter or something perhaps maybe a little bit worse. Other NASDAQ 100 components here under a lot of pressure today. Shares of Netflix really taking a beating today. Look at Netflix, down 25% in one day. 25% in one day. A lot of people thought that Netflix had made it through the worst of its stock. Obviously, had been, crushed for the better part of this year. Then it started moving off its lows in June. Still a damaged stock, but Netflix down 25% today to $60.41. Slowing subscriber growth, the problem here. Earnings down 91% from a year ago to 11 cents a share. Sales up 13% to 889.2 million. All right, got a couple calls on the line, so we're going to interrupt our discussion of the NASDAQ 100. Happy to do it. To take a call from Bill, Wakefield, Massachusetts. How you doing today, Bill?
I'm doing great, Ken. How about you?
No complaints, no complaints. You want to talk Thermo Fisher Scientific?
Yeah, I've been watching it for a while. It seems like it's been in an awfully long consolidation, and today it's up on some pretty big volume. I was wondering if you thought I could pull the trigger, or what do you think?
Yeah, so Thermo Fisher Scientific. This is a stock that it does look like a breakout today. Good solid volume. The swing point was 53.62. Right now it's trading around 53.88. So it's probably still within buying range. The one concern I have here is even though it's a company with a pretty decent balance sheet, fundamentally pretty good, it's still kind of deep inside a longer base here. So still about 17% off its recent high. I'm a little wary of breakouts from stocks that are still 15-20% off recent highs. This one could work, but that's my general take on it. This is a breakout where it still has a ways to go to get up to that $58 price level. It could face some selling pressure as it approaches that, but I'd give it a lukewarm okay, lukewarm green light here, but I'd like to see it, up closer to that, that $57, $58 price level. But, good day of accumulation for the stock today. I don't follow it that closely. Did they report earnings last night or early today?
Yeah, they did, I think.
Yeah. So I see the revenues were up 9% to $3.1 billion. That's the main issue right now, Bill. Is that it's just breaking out, but it's still kind of deep inside a base. I would really call the start of the base all the way back in late March. It hit that high of 58, corrected down to about 48, started, working its way higher. So even though it's breaking out over a swing point today of 53.62, still has some overhead supply to contend with. So it may not be a straight path up here. That's my only concern.
All right, great. Thank you, Ken.
All right, Bill. Thanks. Appreciate it. All right, Bill from Wakefield, Mass. Thermo Scientific. Yeah, good earnings and sales growth here. Technically, listen, anytime a stock breaks out over a swing point in heavy volume, that's a good sign. But I'd like to see these breakouts over swing points when a stock is closer to its high. That's the bottom line with Thermo Fisher Scientific. Even with today's move, it's still about 17% off its recent high. So that's a breakout from deep inside a base. A little riskier. That's the bottom line there. All right, moving on. We're going to talk to Joe in Boston. Joe, how you doing today, buddy?
I'm doing well. How are you?
Not bad. No complaints.
Good. My question for you on this LL here.
Lumber Liquidators. Yeah. Let me pull it up here in Tiger TV.
Sure.
Okay, Lumber Liquidators. Yes, sir.
If you didn't, I'm not in it, but if you didn't get it back in April when it kind of broke out there, it really didn't give you a chance. It didn't set up that well. It was kind of in like an ascending wedge. Could you speak a little bit about this formation here, if you've seen it before? It's kind of just hard, just hard to see it.
It's certainly a very difficult buy up at this point, Joe. I think your take on it is generally right. I think the buy on Lumber Liquidators was in late April,
right,
when it it broke out over what was about $26 a share. It was a good heavy volume breakout from a cup with handle base. And then what happened is that it rose for a little while. You could call it a little bounce off the 10-week moving average, where it then made another move over $30 a share.
Right.
But then it's just been kind of wedging higher here. Yeah, I mean, not a stock that I'd be a buyer at up here. Some stocks.
I know, but I'm saying neither would I. I just wanted to speak to it really never gave you a good chance to get in.
No, in fact, when it broke out from that cup with handle base in late April, one thing you could have looked for here would have been sort of like an ascending base, where a stock breaks out from a base and then it has three pullbacks, usually over the span of about 15, 16 weeks, something like that, where it pulls back in price 3 separate times, maybe up to 10%, and it started to have that look, but in the end, you really only had two pullbacks on the weekly chart, and the second pullback was hardly any pullback at all. So, yeah, I mean, this is it's pretty standard here. Just a cup with handle breakout in late April. Initial support at the 10-week moving average. was probably an opportunity to maybe add a little bit when it broke out over 30. But if you didn't buy in late April and you didn't buy off support at the 10-week moving average, you really didn't get another opportunity to get in in after that.
Now, if this goes sideways and say holds 38 for like 3 weeks, would that be a better entry?
Oh, yeah. No, absolutely. So when you get a big move like Lumber Liquidators, and by the way, folks, Lumber Liquidators had like one of these, unbelievable earnings reports. I think same-store sales were up 12% in the quarter. Their earnings were up 126% from a year ago. So it was really a blowout quarter. Now, the other thing about Lumber Liquidators, Joe, is that, I don't know if you know, it does have a fairly high short positions, which is one of the reasons you're seeing the big move, probably some short covering here today. But anytime a stock makes a huge move, a 14, 15, 16, 20% move in one day, like Lumber Liquidators is doing, it's actually up closer to 30% at this point. Look for it to move. Look for it to move sideways. Be stubborn about giving back its gains. If it moves sideways in light volume, that's good support. Next time volume comes into the stock, then you'll get another entry point.
All right. Thanks, Ken.
All right. Thanks, Joe. Appreciate it. Lumber Liquidators, big gap up. Yeah, Lumber Liquidators, specialty retailer of hardwood flooring, mentioned that earnings were up 126 from the year-ago quarter, 126%. Sales were up 20% to about $210 million. They handily beat estimates on the bottom line and the top line. And again, same-store sales up a little more than 12% in the quarter. So, but again, a stock with a fairly high short position headed into today. So our new funds piling in here, establishing a new position in the stock, possibly to some extent, but you also have a lot of shorts covering their positions for sure. All right. Let's head back to the major averages here. We started by looking at the NASDAQ 100, holding up pretty well considering Apple's acting weak today. We talked about very weak earnings from Netflix. That stock is just getting hammered today. Priceline, another NASDAQ 100 component. A lot of growth names just acting weak. Look at Priceline here, down 5% today to $632.01 a share. Just recently tried to climb back above its 50-day moving average. Heavy volume in the stock today, trading near its session low. It's back firmly underneath its 50-day line. Price line looking very, very vulnerable here. Another big bull market leader facing a lot of selling pressure. NASDAQ composite tech stocks trying to mount a little rebound today, but not Amazon. It falls below its 50-day moving average, down 2.3% to 217.81. Good base taking shape, but now that it's below its 50-day line, technical picture all of a sudden in question here. So a lot of weakness out there. Decent gains for the market today, but a lot of stocks acting weak. That's a bit troublesome. All right, folks, headed into the first break. We'll be right back. Ken Shreve with you, Breakout Investing.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Folks, one of my jobs as a newsletter writer is to help subscribers, to help readers, keep capital intact during downtrending markets, not to have adequate exposure to the market during uptrends, to have very little exposure to the market during downtrends. And, the selling pressure has been building in the market for quite some time. Distribution most pronounced in the NASDAQ composite. I think headed into today, we had 6 higher volume declines, 5 since July 10th. They've started to cluster. A lot of nervousness out there in the market. S&P 500 only had about 3, but when you look at most of the growth names out there, many are under quite a bit of pressure here. And the screens that I use really aren't showing me much at all. Every day you see stocks moving. There are some earnings stories today. We'll get into some stocks bucking the trend today, moving higher, but still just overall a pretty risky environment to be trying to make money on the long side in stocks. But that being said, it's also a difficult environment to be short as well, because any day the Fed could enact another round of stimulus. Don't forget the next meeting for the Fed is coming up next week, July 31st to August 1st, a 2-day meeting, Tuesday and Wednesday. It'll end on Wednesday, and there was a report just before the close yesterday where the Wall Street Journal reported that the Fed is ready to act, and we are going to get some color about what the next form of stimulus will be. So tough environment to be short with that potential headline. hanging over the market. But hopefully news from the Fed will bring some buyers in here, and we'll see what happens. But overall, things are looking not so great at the moment. Volume right now on the New York Stock Exchange tracking pretty close to what we saw Tuesday. Yesterday volume was 803 million shares, pretty much average on the NYSE. NASDAQ volume at one point was tracking a little bit higher than Tuesday. Today, yesterday, 1.7 billion shares, pretty much average. Again, tracking a little bit higher than that today. So last check on the market here. NASDAQ composite is under a little selling pressure as we head into the close here. About 35 minutes left to go in Wednesday's session. Composite right now down 9 points. It was green just maybe 10-15 minutes ago in positive territory, but NASDAQ has once again turned lower, down 0.3% to 28.53. The 200-day moving average for the NASDAQ is clearly in play here at 28.29. So you're talking about 14 points above the 200-day moving average, a long-term support level for the composite. So definitely looking a bit unsettled here. Let's check in on the S&P 500 as well. We'll see that the benchmark index trading right in the middle half of its trading range, mostly unchanged at this point, down half a point to 1338. It is holding just a hair above its 50-day moving average, about 5 points or so. So kind of unsettled market out there. We'll see what happens. Busy week of economic data next week, culminating with the jobs report on Friday. Again, the two-day Fed meeting Tuesday and Wednesday, so there will likely be some fireworks in the market next week. Taking a look at crude oil today, up 0.5% to $88.97 a barrel. $88.97 a barrel. Let's check in on the USO here. This is the U.S. Oil Fund, a very liquid ETF. Little bounce off the 50-day moving average today. It is up near its session high, up 3 cents. Not much, but up 3 cents to 33.18. It hit an intraday low of 32.45. That pretty much is where the 50-day moving average is for USO. So it is hanging in there, finding support. And gold today up 2%. Good move for gold. $1,608.10 an ounce. Check in on the GLD. Remember, we were talking about the GLD repeatedly facing resistance at its 50-day moving average. Well, it gapped up today. Up 1.4% to 155.60. So that 50-day being a resistance level, not so much anymore with a gap up for the GLD today. Early on, the Dow was outperforming by quite a bit. Let's take a look at the Dow. We had a couple of earnings reports in the Dow that investors were initially happy with. The Dow right now is still up 57 points, so it is outperforming today to 12,674. And the two earnings reports that look pretty good were Boeing. Check in on shares of Boeing. It is up almost 3% today to 74.08. Earnings only up 2% from a year ago to $1.27 a share. Sales were up 21% to $20 billion. Strong sales of commercial airplanes and unexpected growth at its defense unit. So a good day of outperformance for Boeing. All right, folks, stick with me. Headed into another break. We'll be right back. Ken Shreve, Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about technical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. Earlier we took a call from Joe in Boston about lumber liquidators and really what to look for after a huge gap up, a big day of short covering for the stock. Clearly a stock that's not in buying range here, but what do you want to see after a move like this? And basically sideways movement after a gap up is ideal. And there are some stocks that are doing that. Let's take a look at eBay. eBay had a big gap up last week on strong earnings, and it generally has been moving sideways, showing relative price strength. eBay is a current holding in my Ultimate Growth Stocks model portfolio. I'm also very encouraged by the action in Athena Health. Athena Health had a big move late last week, and you can see how the past 3 days it's being really stubborn about giving back those gains on Friday. So Athena Health, another stock that's acting pretty well here in a down tape. And let's not forget about Mellanox Technologies, MLNX. You see a big gap up for this stock. When it reported just blowout earnings. What is it doing? It's not reversing in heavy volume. It's just kind of hanging around there. And there are times when stocks do not fill gaps. Okay, there are plenty of examples where a stock, it's a commonly held technical analysis rule that stocks always have to fill their gaps. While that's true a lot of the time, sometimes that is not the case. I remember during Priceline and Intuitive Surgical's big run-ups, there were times when the stocks gapped up and they never filled the gap. But Mellanox is another stock after a big gap up last week on strong earnings, being very stubborn, moving sideways, showing price strength here. So pretty good action in those three names. But, all that said, even stocks that are showing decent technicals in this market environment, all stocks are vulnerable right now. Before we went to break, we were talking about shares of Boeing. It's outperforming today, better than expected earnings from the aerospace company. Also, Caterpillar in the Dow. Caterpillar had good bottom line and top line growth. CEO once again talking about an economy that really isn't looking too bad from his perspective, but not a great day for shares of Caterpillar. It traded all the way up to its 50-day moving average at around 85.45. Got turned away. This is a very broken stock here. Technically very weak, but Caterpillar still up 1.3% today to 82.52. But resistance at the 50-day moving average could be problematic in the near term for Caterpillar. Earnings up 48% from a year ago, $2.54 a share. Sales were up 22%. So the bottom line and top line growth has been there for Caterpillar for several quarters, but that hasn't kept sellers away from the stock. Again, the CEO cited pockets of weakness around the world, but said global economy was improving. Economic data today, we did have new home sales data for June. They fell 8.4% sequentially from May's revised rate. 350,000 was the data point, but that was well below expectations of 370,000. So that is causing some selling in the home building space. Check in on the iShares Dow Jones U.S. Home Construction Index Fund. Big move downward for this ETF today. Down 3.4% to 1596. First key support level here is going to be 1571. So if the home builder strength in recent weeks is to be believed, then one would expect the ITB to firm up at the 50-day moving average here at 1571. But in this type of tape and with the new home sales data that we saw today, that may not be the case. Let's check in on shares of Ryland Group. They're going to be reporting earnings after the close. Ryland Group expected to earn 16 cents a share. They lost 24 cents in the year-ago quarter, so looking for profitability this time around. 16 cents a share is the consensus estimate. Nice top-line growth expected at Ryland Group, up 32% to $297 million. But Ryland Group looking a lot like ITB here. It is down 4% ahead of the news to 24.86. Still holding comfortably above its 50-day moving average at 23.56, but got to tell you, selling pressure starting to build in the home builders. A little bit cause for concern here. Economic data tomorrow. Weekly jobless claims, of course, every Thursday. Durable goods orders for June, and then pending home sales also for June due tomorrow. Friday, big piece of economic data. The first reading for second quarter gross domestic product. Expected to come in at 1.2%. Not that great considering the economy grew at a rate of 1.9% in the first quarter, but we'll see what the first look at second quarter GDP looks like on Friday, and then also on Friday the final reading from the University of Michigan Consumer Sentiment Index for July. That will also be out. Managed care firms under a lot of pressure today. Lower than expected earnings and a reduced outlook from WellPoint, WLP. A lot of damage done to WellPoint today. WLP. Let's take a look at WellPoint Health Networks. Big gap down for the stock today. Had been under a lot of selling pressure. It is down 12.3% today to 53.85. Back in June, this was a $72 stock. So it is gotten quite a bit of a haircut in recent weeks. Bad news from WellPoint weighed on a lot of other stocks in the group. United Health, Humana, Aetna, Cigna, all down in heavy volume. All right, let's take a look at some charts here that are still intact. We saw earnings from Biogen Idec yesterday. Not a great day for the stock, but a good bounce back for Biogen IDEC today. You can see a good bounce off the 50-day moving average. It was not a great day for the stock. The earnings were really solid. I mean, good bottom line, top line growth, exceeded expectations, but stock closed near its low for the day after early strength, but good snap back for Biogen today, up close to 3% to 143.32. So Biogen showing good action at its 50-day moving average. Let's take a look at Vitamin Shop. Vitamin Shop, earnings due August 7th. Still a ways away, but a stock that earlier this week on Monday enjoyed a nice bounce off its 50-day moving average. It is outperforming again today, up 2.5% to 55.27. So good fundamentals, good technicals here. Again, earnings still a ways out, August 7th. So keep Vitamin Shop on your watch list. Take a look at Cyberonics here, CYBX. Going through my screens today, another stock that has come in constructively to its 50-day moving average after showing excellent relative price strength for the month of June, but shares of Cyberonics up 1.7% today to 43.78. Cyberonics, innovative firm here, makes implantable devices used to treat epilepsy, depression, other neurological disorders. Check in on generic drug maker Perrigo as well, PRGO. And kind of going through these charts in Tiger TV, folks, if you want to look at those charts right along with me, Channel 1, the show is carried live in Tiger TV and the archived on Channel 13. But Perrigo, another example of support at the 50-day moving average. Stock is up 1% today to 111.83. 111.83 last quote for Perrigo. Good early support at the 50-day moving average here. And let's take a look at shares of MYGN. I don't know if I've mentioned this one on the show, but you do have a nice little cup with handle pattern taking shape here. And you know, this is frustrating when you see good technical setups taking shape in a weak tape. They're tempting to buy, but you really have to pay attention to the big picture here. We're dealing in a market that is under distribution. That's the bottom line. And when the market tide is flowing as negative as it is right now, technically healthy stocks are typically going to have a hard time making headway. But shares of Myriad Genetics up 1.3% today to 25.76. Myriad Genetics is a molecular diagnostic company, and I do have a weekly chart for Myriad. Let's check it out here. And you do see a beautiful cup with handle pattern here. Here's the start of the base. Stock corrects down to 21.22, works its way higher. Now it is just forming a little handle area here. So a breakout over 26 is not out of the question here, and we'll see if it can muster it up. But a good, solid technical setup here, and a company also with a pretty decent track record of growth. And finally, another cup with handle pattern here. Let's check in on Francesca's Holdings. This is a women's apparel boutique retailer. Recent new issue has worked its way nicely higher. A big sell-off in the stock, but starting in mid-May, it has rallied back and forming a little handle area here. Francesca's Holdings today up 17 cents to 29.72. Let's check in on a weekly chart for Francesca's as well, and you'll see a cup with handle pattern taking shape. So keeping an eye on this one for a potential breakout over 32, just over 32. Good technical setup. Question is, will the market let it run? The answer is not until new money starts to come in from the sidelines, because that's the real fuel for technical breakouts, and without it, they are really not going to go anywhere. Here's a small stock I found in my screens today. A nice chart and good fundamentals. This is a company called Nara Bancorp based in Los Angeles here. It's only an $11 stock, but it's up 1.5% today to $11.19. Had earnings earlier this week from Nara Bancorp, and I have a weekly chart here. Let's pull it up real quick. Let's see here. I know I have it somewhere. There it is. Nope. Bear with me here. All right, Nara Bancorp, there it is. And you do have another cup with handle pattern taking shape here. So, potential for a breakout here over $11.50. So used to seeing negative headlines in the financial sector. But Nara Bancorp, again, earnings earlier this week were up 43% to 20 cents a share. Sales were up 72% from a year ago to $77.2 million. So this is one financial that has some potential here, and we'll keep an eye on LA-based Nara Bancorp for a potential breakout here. Kind of a smaller, thinner stock, but technically very healthy in this week tape. We mentioned earnings from Apple after the close yesterday. Boy, there were some really a lot of other ugly earnings reports here. Let's check in on shares of Buffalo Wild Wings. This is a former holding in the Ultimate Growth Stocks model portfolio that I got out of a long time ago. Happy that I did. I use a combination of fundamental and technical analysis to help me decide when to buy a stock, and then I use technical analysis alone to help me when to sell. So Buffalo Wild Wings, a very, very rough day for the restaurant firm here, down 10.4% to $70.68. Earnings up 7% to 62 cents a share. Sales were up 30% to $238.7 million, but those results were not good enough for investors. Buffalo Wild Wings, a stock that I've been talking about for a while as being broken here. Weak earnings from Buffalo Wild Wings. Panera, different story. Sometimes I think I'm the only one that likes food at Panera. I always enjoy my soup and sandwich there, or whatever I decide to have. But Panera holding on to gains nicely today. Big gap up for the stock. It's up close to 8% today to $153.23. Bottom line growth at Panera up 27% from a year ago to $1.50 a share. Sales were up 18% to about $530 million. So investors liking the results of Panera. Remember, we took a call from Bill in Wakefield, Mass. Earlier today about Thermo Fisher Scientific, a stock that was breaking out from deep inside a base. This is another example of that happening. Panera Bread, you can see it broke out over a swing point here of 152. So a lot of people would find that compelling. Good, strong volume in the stock today. But bottom line, Panera is still far off its high. So this is another example of a stock that is going to face probably some overhead supply as it works its way higher. Panera is only about 8% from its recent high, but bottom line, despite a big price move today, it's still a base building stock. It's still in a base. It's really going to have to to clear its current consolidation, it's going to have to get over the 165 price level to qualify as a true technical breakout. Sellers continue to have the upper hand in Questcor Pharmaceuticals. Remember, Questcor was the target of a short-selling piece few weeks ago. Stock just fell apart. Questcor today down 12.6% to $38.99. Earnings up 200% from a year ago. Sales up 145%. Their key drug is Acthar Gel. But big sellers in the stock today. I wouldn't touch this one with a 10-foot pole. All right, folks, headed into the final break. We'll check in on the markets when we come back. Thanks very much for listening. Breakout Investing on TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. Ken Shreve with you. Don't forget, folks, if you want to get a 30-day free trial to Ultimate Growth Stocks, go to kenshreve.com. That takes you right to my TFNN information page. One click gets you right to the Ultimate Growth Stocks banner. Just click on that banner. Fill out your information, and you can get 30 days free to my newsletter. My investing methodology right now is telling me to stay, mostly on the sidelines. I have very limited exposure to the market here. Have a few holdings in the model portfolio, but that's it. When I start to see signs that new money is coming in from the sidelines, when I see emerging leaders start to take better shape, that is generally when I'm going to start nibbling at some new names here. But I suspect with the technical damage that has been done to the market, and really just looking at how my screens look overall, it's going to just take a little while for the setups to truly present themselves. We went over some interesting setups earlier in the program. Myriad Genetics, MYGN was one of them. Some stocks trying to firm up at their 50-day moving averages. Biogen IDEC, high-quality large-cap biotech, BIIB. Vitamin Shop, VSI, also acting pretty well. And also Cyberonics. A bit more speculative Cyberonics, but still pretty decent growth at that company's CYBX, showing good supporting action at its 50-day moving average as well. All right, checking in on the NASDAQ Composite as we head into the close here. Getting a close near the low here, down almost 12 points, 0.4%. Another disappointing session for the market. I mean, distribution, higher volume declines have been so pronounced in the NASDAQ for so much time now. It's not really surprising to see another potential distribution day taking shape here. Increasing number of higher volume declines. Distribution days like that is really a signal to keep your powder dry, get out of the market's way, don't try to make money in a downtrending market, and that's the strategy I'm following pretty closely with the Ultimate Growth Stocks model portfolio. But NASDAQ right now down about 12 points to 2851. Holding its 200-day moving average for now, 28.29, and the S&P 500 is also in the bottom half of its trading range, holding just above its 50-day moving average. S&P 500 not down that much, just a little over a point to 1331. And the Dow, after early strength, the Dow has been outperforming for the better part of the day. It's still up 47.5 points, 0.4% to 12,664. So that's where we're at with the general market here. After the close, some high-profile earnings reports. Equinix, EQIX. This is a stock that I thought had pretty strong potential at one point. Now that it's below its 50-day moving average, buying demand definitely seems to be drying up here. Equinix right now up 14 cents to 161.87. Equinix is a operates data centers for companies that have a lot of data. Basically, Equinix customers lease space from Equinix to house computer services. So we'll see what Equinix has to say after the close. Again, looking a bit vulnerable here. This is another tech name that has been a big winner in recent months, but starting to look a little bit tired here. Also after the close, Akamai. Let's take a look at Akamai Technologies. This is a stock, also a broken stock here, down 0.5% to 28.23 ahead of the results. Some other names reporting after the close: Citrix Systems, CTXS, Fortinet, FTNT, Las Vegas Sands, Tesla Motors, and Visa, ticker V. Coming up next, the Tom O'Brien Show, 4 to 6 Eastern. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Take care, folks.